Bismillahirrahmanirrahim. Hi everyone. Today in this video, we will learn a few different types of journal entries. Okay, let us see here. First of all, we will learn here that if any type of goods given to charity or any type of goods donated by the business at the time, what entry we will pass. It means uh, goods given to charity, goods given to charity or donation. Suppose your business donate few of the goods to the charity or any other NGOs like this. Then at that time, what entry you will pass here? As you know that charity or donation, this is just like expense for your business. Here, what account will be debit here? As you know that expense account will be debit. So charity or donation account will be debit here. You are giving goods, not cash. If you will give cash as a charity or donation, then cash will be goes out. So here, uh, at the time, your cash account will be credit. Here you are giving goods, not the cash. And if we purchase the goods at the time, what entry we pass? Purchase account debit to cash account. If we purchase on credit, purchase account debit to creditors account. So here, at the time of purchasing the goods, purchase account is to be debit. Now you are donating the goods. Here your purchase account will be credit. So we can write here purchase account to purchase account. So the entry will be passed here charity or donation account debit to purchase account. You can write also the narration here being goods given to charity or being goods given as donation. Now come to the next transaction. Suppose you are giving goods as a sample because in a business you will have to make a sample of the goods and you will have to distribute these samples uh, among your customers. Then at the time when you are giving goods as a sample, goods given as sample, at that time what entry you will pass here? Sample in the sense, just like for advertisement you are giving the goods, you are uh, giving the goods for your sales promotion. So advertisement will also be an expense for the business. At the time what entry you will pass here? You can make the entry here advertisement expense account debit or sample account debit. You can also write sample account because sample or advertisement both you can use here. Advertisement expense account debit to you are giving goods. So here also your purchase account will be credit. Purchase account will be credit here. Now if we talk about the withdrawal of goods for your personal use, it means we are talking about the drawing. As you know that drawing may be in the form of cash or in the form of goods also. If we withdraw cash from the business for personal use, at that time what entry we were making? Drawing account debit to cash account like this. Drawing account debit to cash account. On the same way, if any proprietor withdraw goods from their business for their personal use, in the same way, we will make the entry drawing account debit to in place of cash. Here we will write the purchase account because he is withdrawing the goods, not the cash balance. So we will write here purchase account. So in case of drawing, this entry will be pass. Now the next very important journal entry is here, that purchase or sale of fixed asset. At the time of purchase or sale of fixed asset, suppose you are purchasing machinery, rupees 1 lakh. Installation charge of this machinery is rupees 10,000. Any other charge, suppose cartage of this machinery is 5,000. So what entry you will pass? How these amounts, installation charges, cartage, how you will adjust? So remember the point here, that whenever you are purchasing any type of fixed asset, at the time of purchasing of fixed asset, all these expenses, like this, all these expenses will be charged on these assets account, not any other account. It means we not it means we need not to open any another account while we are purchasing the machinery related to these expenses. After certain period of time, suppose you have used these machinery 1 year, and after 1 year you are paying repair charges like this. This will be treated as repair expense account like this. But at the time of purchasing of machinery, or at the time of purchasing of any fixed asset, not only machinery, any fixed asset, all these types of expenses will be included on that fixed asset account. So what entry we will pass here? We will pass here the entry machinery account debit, because machinery is an asset, and asset account, the rule of asset account is that increase in asset debit, decrease in asset credit. Here you are purchasing machinery, it means your asset is increasing. Machinery account debit. 2, if you are paying through cash, then you can write here to cash account. You are paying through check, then you can also use bank account. If you are purchasing on credit, then you can also write here your creditor name like this. At the time of sale of machinery, at the time of sale of machinery, what entry you will pass here? Because you have already used all these fixed assets, all these machineries or any other things. Now after a certain period of time, you are selling these fixed assets. If you will sell these assets, it means your cash or bank balance will be increased. If you will receive the money from the through the cash, then your cash balance or in your bank balance will be increased. It means this will be debit. You are selling the machinery or any fixed asset, then value of fixed asset, your asset will be decrease here, so the asset will be credit here. So fixed asset will be credit here to fixed asset account, this will be credit here. But remember the thing, that At the time of selling of any fixed asset that we were already using that assets, we will have to calculate the profit or loss of the asset. We will have to calculate the profit or loss of that asset. Suppose you have purchased machinery rupees 1 lakh. 3 years you have uses this machinery. After 3 years, you are going to sell this machinery, and you have calculated uh, depreciation at the rate of 10% each year. Because if you will use any type of fixed asset, as you know that after certain period of time the value of fixed asset will be decrease due to uses of that asset, due to tear and wear of that asset. So you are charging depreciation on these assets. How much? 10%. Suppose 10,000 every year you are charging depreciation. It means 3 years you have uses 30,000. This will be your depreciation amount. It means now the book value of asset what will be? 70,000. And you are selling these assets in 68,000. This is your sales price. So here your book value is 70,000 and you are selling this asset in 68,000. It means 2,000 you are getting loss. So at the time of purchase or sale of any fixed asset, you will have to also calculate the profit or loss from that asset. So if you are getting loss it means just like expense, as you know that expenses and losses are debit. So if it happens loss, so it will be debit. We will write here loss on sale of fixed asset, yeah, asset account debit. If you are getting profit, it means income. So your income will be credit here. So we will write here profit on sale of fixed asset or sale of assets account. This will be credit here. So remember that if you are selling any type of fixed asset, at the time you will have to calculate the profit or loss of that asset. If profit, it means credit, showing credit. If loss, showing debit. So these were all about the journal entries.